Welcome to The Explainer. Okay, so today we're unpacking a massive global financial shift that's happening right under our noses. It all revolves around one big burning question. Why is China abruptly altering its gold markets? And, fundamentally, why in the world are they hoarding so much of it? Let's dive right in.
So between June and July 24th, some of China's absolute biggest banks, we're talking giant institutions like the Industrial Commercial Bank of China, the Postal Savings Bank, and Ping An Bank, did something honestly practically unheard of. They just completely pulled the plug on paper gold trading for their retail investors. Like, if you were a Chinese citizen wanting to trade paper claims on gold through your bank, your access was effectively switched off overnight. But why shut down such a massive avenue for retail investing so suddenly?
Well, the official story from Beijing comes down to one specific number, and that is 140%. The government claims they're simply trying to protect everyday retail traders from extreme market volatility because, gold hit an all-time high of over $5,000 an ounce earlier in the year, only to crash by about 28% right after. So to quote-unquote protect people, these banks raised the margin requirement, the collateral you need to borrow money to trade, to a record high of 140%. Basically, they're demanding more collateral than the investment itself is even worth. It makes it nearly impossible for everyday people to speculate. But is that the whole truth?
That brings us to the unofficial story. This theory suggests it isn't really about protecting retail traders at all. Actually, this points directly to the core of why China is hoarding physical gold in the first place: real price discovery. Think about it. To figure out what an asset is genuinely worth in the real world, you first have to shut down the casino where people are just gambling on its paper price.
To really grasp this, we have to look at the fundamental difference between physical and paper gold. Physical gold is tangible. It's actual metal sitting in a vault, meaning it has real, undeniable physical scarcity. Paper gold, on the other hand, consists of leveraged contracts and speculative claims. In these massive Western markets like London or New York, the vast majority of gold traded every single day is never actually physically delivered. People are quite literally just trading pieces of paper that represent a claim on gold.
If you're wondering exactly how paper markets suppress prices, just imagine having one incredibly rare ancient Mu trading card locked in a safe. Okay, that's step one. Now, step two, I write up 10 paper certificates, each claiming ownership of that one single card, and I sell them to 10 different people who, importantly, never actually come to collect the physical card. For step three, the market looks around, sees 10 paper claims floating out there, and totally assumes the supply is 10 times higher than it actually is. Because the perceived supply is so high, the price naturally crashes. And this is exactly how paper gold markets can artificially inflate supply and, as a result, completely suppress the true price of the physical asset.
So, you might be asking yourself right now, and it's definitely the right question to ask, is there actual evidence of a fake paper market in gold? How would we even know if this theory of paper suppression holds water? Well, we just need to look at how the smartest, most sophisticated money managers on the planet would react if they knew the paper supply was artificially inflated. I mean, if you knew the paper was fake, you'd sell your paper and aggressively buy up the real physical thing, right?
And wouldn't you know it, central banks are revealing their exact strategy right now through their actions. Are they selling paper and buying physical? Yes, they absolutely are. Just in the first quarter alone, central banks scooped up a record 244 tons of physical gold. I mean, they're buying at the fastest pace in recorded history. And how are they funding this massive buying spree? They're dumping U.S. treasuries, which are basically the ultimate paper promise. For 50 years, the global strategy was to park extra money in U.S. paper. Right now, we're watching that strategy completely throw it in reverse.
And when we look closely at why China, specifically, is hoarding gold, the numbers are just staggering. Officially, China bought 163 tons of gold in May alone. But here is the truly wild part. The World Gold Council estimates that a massive chunk of global gold buying is completely undisclosed. This shadow accumulation means the real amount of physical gold China is buying and hoarding could be up to 10 times higher than what they're actually publicly reporting. They are quietly, but very aggressively draining the physical supply.
All of this points to a massive geopolitical shift, which is a conscious move away from the US dollar. For decades, the global system relied heavily on US paper promises, and that gave the United States basically unchecked financial power. But after decades of this dynamic, the world is seeking economic multipolarity, basically a system where many nations contribute, rather than just one ruling the entire financial world. Countries are deciding they just don't want to rely solely on paper dollars anymore. They want real, tangible money. And this matters to you because a shift away from the dollar affects global purchasing power, inflation, and trade dynamics pretty much everywhere.
And listen, this isn't some spur-of-the-moment decision. Way back in 2014, the head of the Shanghai Gold Exchange stated very clearly, quote, "When China has the right to speak, gold's price will be revealed." This shows us that China has been meticulously planning to challenge the Western paper gold pricing system for over a decade. They've literally just been waiting for the right moment to reveal the true price of physical gold. So this long-term planning is now culminating in a completely parallel financial system. The Shanghai Gold Exchange acts as the vault, where trades demand actual physical delivery, forcing real price discovery. But because China has strict capital controls, they're using Hong Kong as the front door for foreign nations to come in and trade. Teaming up, they are building an entirely new financial ecosystem built on physical delivery, absolutely not paper, sitting completely outside the US dollar system. It's a casino where, theoretically anyway, the house cannot cheat.
If you want physical proof of this new system taking shape, just look at Hong Kong's current vault expansion. They are moving from a 200-ton capacity to over 2,000 tons. That is a 10x increase. You absolutely do not need a vault this massive if you're just running a paper trading casino. No way. You only build infrastructure on this unbelievable scale if you are planning to settle massive global trades in real, heavy, physical metal.
Which brings us right to the grand motive here, creating an anchor. China knows perfectly well that the world doesn't fully trust its currency, the yuan, standing on its own. But the world absolutely trusts gold. So by forcing commodity deals to be priced in yuan, but then settled in physical gold sitting in their massive vaults, China is giving its currency a rock-solid anchor. They are providing the world with the exact stability and trust needed to hold Chinese currency, effectively challenging the dollar without firing a single shot.
Now, if China is successfully building this gold-backed parallel system, we really have to look at the other side of the chessboard here. How in the world will the United States counter this? Let's explore some of the speculative theories surrounding the U.S. response. The staggering reality of it all is hidden right in the math. The U.S. government allegedly owns about 8,000 tons of gold, but because of a quirky accounting trick dating all the way back to the Nixon era, the official U.S. books value that gold at just $42 an ounce, a price set back in 1973. So officially, that's only about $11 billion. But if you look at today's market price, which is hovering closer to $4,000 an ounce, that exact same gold is worth roughly $1 trillion. That is a massive trillion-dollar gap just sitting there, hidden on the balance sheet. This means the U.S. Treasury actually has some incredibly powerful potential responses up its sleeve. Literally, with the stroke of a pen, they could revalue their 8,000 tons of gold to the current market price, instantly unlocking $1 trillion in value. I mean, the Treasury Secretary has even openly discussed monetizing the asset side of the U.S. balance sheet. Furthermore, economists like Judy Shelton have actually proposed issuing a 50-year Treasury bond that is directly redeemable in physical gold. The U.S. could essentially mirror China's strategy and just re-anchor its own bonds to physical metal.
When you step back and view this whole thing as a chronological chess match, the true scale becomes super clear. Back in 1973, the U.S. set its artificially low official gold price. By 2014, China was already signaling its intent to reveal gold's true price. Fast forward to today, 2024, and China abruptly pulls the plug on paper trading to force physical delivery. This all leads to a really fascinating piece of speculation for 2026. Could the U.S. use America's 250th anniversary on July 4th, 2026, to launch a gold-backed bond as a sort of new monetary declaration of independence? I mean, the timing perfectly aligns. Which really leaves us with one profound question. As the East actively hoards metal and builds real physical anchors for their currencies, and the West quietly explores its own trillion-dollar countermoves, we are undeniably witnessing a fundamental shift in what the world actually considers to be money. If this push for global multipolarity succeeds, what is the ultimate fate of the fiat US dollar? Will paper promises survive in a world that is suddenly demanding real, physical assets? Thank you for joining me on this explainer. Keep questioning the data, and I'll see you next time as we decode the next great mystery.